Welcome to Drill Down Earnings. We have quarterly results out from Intel Corporation. If you prefer, I'm Cory Johnson, Chief Market Strategist for Epistrophy Capital Research. When we look for Intel earnings, we look for the transformation of this company. It is one of the 50 most important companies in technology, certainly. And the turnaround of this once mighty company is showing some signs of improvement. The stock is certainly reacting to these Q3 numbers. Now, the market was looking for $13.1 billion in revenues. It got $13.7 billion in revenues. Non-GAAP earnings per share, a lot better than expected. And like I said, the market liked these numbers. But let's dig a little bit deeper. So revenues ticked up. 3% growth is not much to write home about, but these guys haven't seen any growth really in revenues at all in almost 2 years. So this is an improvement here, certainly, to get to $13.7 billion. And their fourth straight quarter of improved execution. They say an above guidance results. That's really just about the guidance than what they told us they were going to do as opposed to what the results are. But look, it's better. Let's give them credit for that. And gross margins up to 38%. That's a lot better than where it was a year ago, or a lot better than a horrible quarter a year ago. But still the trend overall is down. Let's see continued improvement there. But gross margins at 38%, one of the best quarters they put up in about a year and a half. So we'll give them credit there. And yes, operating profits, exclamation point. They call that a slam. And 5% operating profits. It's about time for this company. Now, when you look at what the business is, their biggest business did a little bit better than expected, and that's really the story. If you wanted to walk away right now, please don't. Please, there's more to come. There's a CEO quote as well as other things. But look, 48% of revenues from client computing, that's PCs essentially. Data centers a big business. Fabs a big business. Other stuff, small business. But PC sales, surprising rebound, surprising boost there. What they call their client computing group sales up 5% on a year-over-year basis, $8.5 billion. AI PCs, those are really just high-end PCs. They call them AI PCs, but whatever. Windows 11 upgrades, corporate upgrades were kind of moved well past the post-pandemic period, perhaps, when people had updated their computers. So we're seeing real changes there and growth in that business. Commercial demand for their core Ultra products. Their data center business, not great, kind of fading. Data center and AI, that's what they call the category, down 1% to $4.1 billion. They did say they saw within those numbers, though, positive demand for their Xeon processors and their next gen Xeon 6 Plus, which they call Clearwater Forest, and the GPUs, Crescent Island. Got to do something about these names, guys, really? But anyway, that whole business overall down 1%. That's not good because the trend has been getting worse and worse and worse for the data center and AI business. Again, they said within that number, there are some numbers that are good, but the overall result is not. And look, the big story here, and let's talk about it for a minute, is Foundry. We're waiting for them to move to a more kind of Taiwan semiconductor model where they've got a big Foundry business that's producing results here, and it's just not yet. It's not there yet. Down 2% over last year. Last year wasn't good. We know that's going to take some time. The capital expenditures, we're going to talk about that too. But the Foundry business, look, it's still not there. When you look at the blend of their three main businesses, client computing, data center and AI, and Foundry's still kind of where it was in terms of a percentage of revenues, just not there. Now, the market liked these numbers. The stock was up 7%. And yes, the numbers are better. And the stock has had a real good run, 74%, almost all of that coming since September, and the government's investment in the company, but those investments aren't really paying off yet, even if the PC cycle is getting a little bit better. So we mentioned their CapEx spending. They are pulling way back on their CapEx spending, at least they did in this quarter. At the same time, as money's rolling in, the cash flow statement was really interesting in the financing section of the cash flow statement, not usually where you want to see a lot of excitement. But look, they got $8.9 billion in funding from the U.S. government, $5.7 billion of which was received in this quarter. So the U.S. government wrote Intel a check and they cashed it, and it's in the bank, and they talked about that in the cash flow statement. Equity investments from NVIDIA and SoftBank of $7 billion, not in the bank yet. They sold 51% of their Altera business, or below a 51% threshold, so they can start to recognize money there. So liquidity getting better, which they'll probably dump that right into CapEx. The company's a little safer than it was before. Here's CEO Lip Bhutan.
With the AI driving a lot of growth, we definitely want to play in that. I think this is a very early inning. And so I think there's opportunity for us. And I think one area that we are focused on is our revitalizing our 86 and to really tailor to purpose-built CPU, GPU requirement for the new AI workload. And then really addressing the power efficient agentic and managing all the different agents. This is a new way of compute platform of choice, and that will be also applying to the system and software. You're going to stay tuned. I think we're going to be partnering with some of the incumbents and also the emerging companies that are driving some of these changes.
All right, what does this all mean? What's your big drill on earnings takeaway? And what's the one number you want to remember about this quarter for Intel? Well, I'll tell you that. But first, subscribe to this channel. Click follow. Make sure you come back for what we've got here in the future. It helps us a lot continue to provide these reports. But Intel Q3 earnings, your big essential summary is that $13.7 billion in revenue was a 3% increase on a year-over-year basis. And those aren't the fantastic numbers that other companies have given us in the semiconductor field, but it's better, and better is a change for Intel. But 3% is not the bite. That's not the one number that tells us a whole lot. The one number that tells us a whole lot is $8.535 billion. The company did $8.535 billion in their PC business, in their client computing business. That's better than expected. They're seeing a turnaround that business. They're seeing demand for new AI PCs, and that's good news for Intel. All right, thanks for checking out Drill Down Earnings. You can follow Epistrophy Capital Research, follow me at Cory TV, and follow all of these research podcasts, if you will, on TikTok, Instagram, and on Yahoo at Drill Down Pod.